It's Thursday, the 6th of July, 2023. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. Let's jump straight into story number 1. Australia's largest superannuation fund, Australian Super, returned 8.22% for its default My Super option for the just completed financial year, setting the benchmark, really, for investors around the country.
Yeah, it sure did. Aussie Super has $300 billion under management. It's the country's largest non-government investor. The good result for My Super option was helped by a rally in tech stocks. In fact, its Aussie share portfolio returned 14.5%, global equity portfolio almost 20%, but it has had to write down the value of some of its office towers, i.e. making them valued at less. That's because office towers with more people working from home aren't as valuable as they were pre-COVID. Instead, they're shifting to things like industrial parks and warehouses when it comes to investing in properties. The Aussie Super result also suffered from a drop in private equity and fixed interest investments, though its infrastructure portfolio did pretty well. Didn't do quite as well as the number 2 super fund in the country, Australian Retirement Trust. That came in with a 10% return for the last financial year.
All right, so that's what's happened. What about the future, Sean? What does Aussie Super say about the new financial year?
This is really interesting. Mark Delaney, the group's chief investment officer for nearly 20 years, says 18% of his members' $300 billion is now in bonds, which is 70% more than this time last year. Most of the holdings are in government bonds, and that shows that Aussie Super expects things to get tough, economically speaking. The defensive positioning comes at the expense of most other asset classes. There's lower allocations to international and Australian shares, lower to cash, private equity, unlisted infrastructure and property. Quite a contrast to the last financial year where equities delivered the performance. While 1 year results for a super fund are very, very short term, Aussie Super has averaged about 8.6% annual return over the past decade. Well worth listening to.
Sure is. Okay, story number 2. Australia's capital cities are experiencing their longest run of rental price growth on record, with record prices for units and houses across most capital cities.
So apart from Canberra and Hobart, house and apartment rents across the state capital cities are now at record highs. Sydney has become the most expensive city to rent a house or unit. That's the first time that's happened since 2018. According to a report from Property Marketplace Domain, it is definitely a landlord's market, though a slight rise in vacancy rates to 1% suggests the peak might be over. It's all about too much demand from strong immigration and not enough new supply. The Domain analysis says the current period sets a record for the longest stretch of continuous rental price growth on record for Melbourne house and unit rents, together with houses in Adelaide and units in Sydney and Brisbane. Over the past year, Adelaide, Melbourne and Sydney house rents are up 13%. In Perth, it's 16%. Canberra and Hobart, though, are down 2%. In the unit market, Sydney's up 28%, Melbourne's 22%, Perth 20% and Brisbane 18%.
Story number 3, heading overseas now. A small amount of cocaine was found in the White House over the weekend, Sean. This is according to the New York Times. And it triggered something of a guessing game.
Yes, no surprises there. A white powdery substance was found and initial tests determined that it was cocaine. President Joe Biden and his family were away at Camp David when a uniformed Secret Service agent found the substance during a patrol of the West Wing. It prompted a brief shutdown of some of the White House campus as response workers assessed whether the substance was something more hazardous. A spokesperson for the Secret Service said the substance had been found in a work area of the West Wing. That'll be quite the witch hunt.
It certainly will be. Story number 4. Investors have spent almost $200 million trading shares in Bed Bath & Beyond since the homewares retailer went bankrupt 2 months ago.
It's the ultimate speculative investment. Maybe it's just plain dumb. Mind you, the price of Bed Bath & Beyond shares are up 300% since it went bankrupt. Bed Bath & Beyond was one of a handful of unloved consumer brands that became really popular with retail investors during the coronavirus pandemic, with small investors arranging on social media to push share prices far above what most professionals considered rational. Bed Bath & Beyond ultimately filed for bankruptcy protection in early May. It was delisted. This is according to a story on the Financial Times website. Nevertheless, an average of 18 million of the company's shares have changed hands each day in over-the-counter markets since then. So an over-the-counter market, they're not traded on an exchange, they're just bought and sold directly between investors. Now, in its initial bankruptcy filing in May, Bed Bath & Beyond reported debts of $5.2 billion, assets of $4.4 billion. Last week, the company sold the name Bed Bath & Beyond. I have no idea what these people are buying. Anyway, it's going on.
That is a fantastic story. And so is this one, the last one. Story number 5. Tourists and business travelers to Japan will soon be able to show up in just the clothes they're wearing, thanks to an initiative by Japan Airlines and Sumitomo to offer rental clothing during visits to the country.
Describing the initiative as a bid to promote sustainable tourism while offering convenience, the airline said visitors would be able to select apparel based on size and seasonal needs via a website before boarding a Japan Airlines-operated flight. The service will run on a trial basis through to the middle of next year, according to a story on Bloomberg. One set of clothing will cost between 4,000 and 7,000 yen, let's say about 80 Aussie dollars, and people will be able to rent up to 8 outfits, Michael, for as long as 2 weeks in 3 sizes, small, medium and large. Chosen styles include smart casual and mixed. And the outfits will be delivered to a traveller's designated hotel. Now, the apparel will be sourced from clothing product overstock. That's going to help minimise waste. Very, very innovative, I think, Michael.
Does it include undies?
I didn't go that far into the story. You'd hope so. I wouldn't want to wear the same pair for 2 weeks.
But would you want to wear rented underwear, Sean?
No, very true. No, not at all.
There we go. Anyway, cracks are appearing. There we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 6th of July, 2023. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.